Howdy, friends. Do you know about qualified charitable distributions? Now, you may be a person for whom this information would be a blessing to you in multiple directions. You may be a giver who, managing retirement funds for your personal life, and this information could be an incredible blessing to you. Or you could be a person who manages a qualified public charity, a 501c3, and you could take this information that I'm sharing and you could share it with your donor base, with your community. This is not even a secret, but it almost seems like a hidden secret to people who are managing retirement funds and long to be good stewards and generous givers. Qualified charitable distributions. All right. They allow qualified charitable distributions, QCDs, allow individuals who are 70 and a half years of age or older to donate a specific annual limit directly from their traditional IRA to a qualified public charity. This distribution is not included in the donor's taxable income and can satisfy their required minimum distribution obligation for that tax year. The gift must go directly from the IRA administrator, the holder, the custodian, directly to the charity, or if it comes to you first, it won't be qualified, right? But if it comes directly from the holder, the custodian of the IRA to the qualified public charity, right? That's perfect. It is not eligible for private foundations or donor advised funds. Again, let's go over these requirements and let's go over some benefits, and then we'll move toward talking about standard deductions, right? And it's going to blow your mind, okay? Some of this, if you're managing a retirement account, you're 70 and a half and older, some of this is going to blow your mind. You're not going to believe how you can become immediately this year a better steward and a more generous giver, which most of us long to do. Whether you're managing retirement or you're still in your working years, right? We long to be good stewards, generous givers who have, the good things we value out in front of us at all times. This is going to blow your mind. All right. What are the key rules? All right. I mentioned some of them in my introduction. Let me be very clear about them right now. There is an age requirement. Who is qualified for this? You must be 70 years, 6 months or older to qualify. 70 years, 6 months or older at the time of the distribution, right? So you might have had your birthday, 6 months ago, and now you're 70, but now you're 70 and a half. This is for you. If you're already 71, 72, and so on, this is for you, right? The distribution must come directly from your IRA. Which IRAs? Because there's several kinds: traditional, inherited, inactive SEP, or simple IRA. Now listen, hold on. 401ks and non-IRA accounts are not eligible for qualified charitable distributions. So we're talking about several kinds of IRAs, okay? The funds must be given to a qualified public charity. Now you got to make sure that's who you're giving them to. For example, My Life Matters is a qualified public charity. And there are a lot of good ones here in our community, right? You could be in a whole other community. And I'm here to tell you what I love more givers at My Life Matters. You betcha. We're unveiling a huge plan in the coming weeks to purchase our property, and it would be a great time it is the perfect time to take on new donors. But this is such important information. I want people to connect to things that they are passionate about as they steward their funds. So spread this news far and wide. If you're a friend of ours, if you're a friend of My Life Matters, definitely talk to people in your life who are managing their retirement, right? Make sure they know that the funds must go to a qualified public charity. They must come directly from the custodian. That we're talking about IRA funds. We're not talking about 401ks. We're not talking about non-IRA accounts. Well, we're not talking about giving to private foundations or donor advised funds. We're talking about qualified public charities. Listen, this is big. This is big. Another key rule as you engage with this information is there's a maximum adjusted each year for inflation for the qualified charitable distribution. Now, this might surprise some of y'all. Some of y'all gonna go, I needed to know that. The maximum for 2025 is $108,000. Now, in a few moments, we're going to get to the standard deductions, right? But there's likely, believe it or not, there's likely someone in your life that would love to meet the required minimum distribution at the maximum annual limit to both save themselves some tax funds and also to give where they're passionate about. So the maximum for 2025 qualified charitable distributions to public charities to qualified public charities, $108,000. Can you believe that? That means you can, if you're up there, and some people are, if you're up there, you could literally, fully meet your required minimum distribution or part of it, right? Can it be less? Absolutely. We're going to get into that in a moment. And finally, I want to reiterate this: it has to be a direct transfer. The money has to go directly from the custodian of your IRA to or the administrator, however you want to say it, to the qualified charity. If it comes to you first, it won't be counted as a qualified charitable distribution. All right. So if you're taking that income off of it, if you're taking that distribution off of it, it to you first, and you say, I'm going to get that, and then I'm going to give it. Okay, it's not eligible. Okay. Again, so that's the key rules. That's the key rules, and you might want to stop and rewind and hear those again. Perfect, right? But let's talk about the benefits again. I hit on that in the intro, but let's nail it down. Okay, it's a tax-free distribution, right? Whatever amount that comes as a qualified charitable distribution from your IRA, it will be excluded from your taxable income for that year. Bonus. You're giving where you're passionate. You're stewarding your money. You're paying less taxes. uh, again, it can fulfill or be part of your required minimum distribution for that tax year. Giving it lowers your adjusted gross income. So think about that. And so that reduces your overall tax burden. And there's no itemizing needed. Whether you itemize or don't itemize, you don't have to itemize because of this. Okay, so there's the intro, there's the key rules, and there are some benefits of quarterly charitable distributions. Now, I'm going to read down this list of the 2025 standard deductions. Okay, some of you may be surprised at how much is a standard deduction. Okay. What you might be saying, what is a standard deduction? I know my tax person does it, but I've never thought about it. Well, the standard deduction is the fixed amount that taxpayers can subtract from their adjusted gross income to reduce their taxable income. In other words, what are your giving limits, you might say, that are standard deductions, right? You have no limits on your giving, right? What I'm talking about as it relates to how the IRS views your standard deductions for that year. If you're single, your standard deductions are $15,750. If you're married and filing separately, it's the same as single, $15,750. If you're married and filing jointly, it's $31,500. Okay, standard deduction. If you're a qualifying widow or widower, it's the same as filing married jointly. It's $31,500. If you're the head of household, it's $23,625. Okay, doesn't that blow your mind? Doesn't that blow your mind? Can you give more? Amen. Praise the Lord. But what I'm saying, that's the standard deductions. Standard. Wow. If you are managing, if you are stewarding a retirement account, an IRA retirement account, whether it's traditional IRA, whether it is an inactive SCP, whether it's an inherited IRA, or whether it's a simple IRA. If you're managing some of your retirement funds, if you're stewarding retirement funds through that, then that is you're the person 70 and a half years old or older. You can make qualified charitable distributions that will radically impact your stewardship, your giving, decrease your tax burden, and allow you to be more generous than you imagined you could be. This information needs to get out to people managing their retirement. It needs to get out to people who are engaging with people who want to be givers, who want to be generous, or who are helping people learn a more biblical and blessed stewardship. Right? This information needs to get out to a lot of people. I'm not very good at being coy. Would I like this to get out to current My Life Matters donors who don't know they can give this way? Yes. Would I like it to get out to My Life Matters donors who might begin, potential new donors? Yes. But do I want to see kingdom-oriented people? Do I want to see good stewards managing well with an outpouring of God's heart, right? Generous people, right? Who genuinely believe what Psalm 24:1 says. The earth is the Lord's and the fullness thereof, and everyone who dwells upon it. Who believe the things Jesus taught about stewardship and money management and being wise, like the parable of the talents and the wise manager. Yes, God wants to empower stewardship that increases flourishing and joy and generosity. And so I would like to see this get out to all types of people who are managing and stewarding retirement funds, who long to be generous, who long to be wise, who long to be good stewards. I need this to get out to all other people. Now, let's change gears and very briefly talk about there's a new temporary senior deduction, and this is temporary because it's right now it's only on for 2025 through 2028. And this new temporary deduction for seniors is $6,000 per qualified senior, and this is for individuals who are 65 and over. Okay, that means married couples over 65. They're qualified to give with this senior deduction together $12,000. And I'm here to tell you, this is temporary. It's going to be phased out with a modified adjusted gross income in after 2028. But there's just another thing that's a little bit different thing than the qualified charitable distributions, right? But that's just another little nugget. The real talk here I want to give is sort of twofold, right? That's my little piece of cheese between this is a grilled cheese, and that's my little piece of cheese between the two big pieces of Texas toast I'm giving you. One side of the Texas toast is qualified charitable distribution. The other is let's talk about donating appreciated stock. As I talk to some friends of mine, I don't know if you guys know this, but I talk to a lot of people about giving. And I've also been blessed to have several people in my life who will let me go and learn from them. People who have understood this world to a degree I haven't, or who are living in this retirement fund managing lifestyle, and they've just given me a lot of understanding. Right? I'm here to tell you I'm nowhere near actively managing any sort of retirement funds. Maybe you are, but I'm not, or maybe you're close to that, but I'm not even close, right? So let's talk about donating highly appreciated stock. Have you ever thought about that? Okay. Donating highly appreciated stock is a tax efficient way to make a larger gift, and it has two main benefits that I want to highlight for you. First, you can deduct the fair market value of the stock, fair market at the time of donation of the stock. You can deduct that. Okay. And secondly, and this is the one that gets me excited, you can avoid capital gains taxes. For example, here at My Life Matters, we are very soon going to get our first ever donation of highly appreciated stock. We're setting up to take that. We've never had the capacity to take it. We've never had the offer to take it. But it's coming. And this individual is, number one, he's going to deduct the fair market value of the stock at the time of donation, and he's going to avoid capital gains taxes on it, okay? And you must donate the stock directly to a qualified 501c3 charity, and the donor has to have held the stock for more than 1 year to receive these two benefits, okay? Again, donating a highly appreciated stock is a great way to make a larger gift, and it comes with real benefits, okay? You can maximize your charitable impact, and in doing so, again, avoid capital gains tax. Your gift can be significantly larger than if you had sold the stock, okay, and donated the net proceeds, right? Your gift, your deduction can be bigger, and the gift can be bigger. You would receive full fair market value deduction at the time of its value at the time of the gift if you donate highly appreciated stock to a charity, a 501c3, a qualified charity, okay? You can use this as a measure to rebalance your portfolio. Gifting appreciated stock can be a smart way to practice wise stewardship and a smart strategy for rebalancing a concentrated portfolio without incurring a tax hit, okay? You could donate some shares and then use the cash to buy new shares at current higher price, effectively raising your cost basis for the remaining investment. Okay. I think the thing, I don't know if I'll ever be in this position, but I think the thing that would excite me is avoiding capital gains. I'll be honest, I'm not currently in this position, so I'm talking to a select group of people. And you might say, it's not me either, but you may need to share this with someone. So, 3 or 2 really big things and 1 small thing. Qualified charitable distributions. You might should back up and rewatch this video 2 or 3 times, right? Do you have an IRA? Are you over 70 and a half? Would you like to reduce your adjusted gross income? Would you like to be a more generous giver? Would you like to get some of your minimum distribution, some or all of your minimum distribution, your required minimum distribution covered through giving? Qualified charitable distributions. Temporary senior deductions, 65 and older, $6,000. $6,000 each qualified individual is able to do, and donating highly appreciated stock. All of that in under 20 minutes. Pretty good, huh? And I'm here to tell you, if you have any questions or you want to fill out the paperwork or see how this works, you need to contact the holder, the administrator, the custodian, whatever word you use, the person who administers your retirement funds. For example, if you live here in Roxborough, you might be contacting Derek Green or Kim Fox or Billy Horner, Chad Horner. I don't even know who else. I'm just saying, like, you contact the person or the entity that administers this, and you can get this rolling. You might need to contact Edward Jones or Schwab, whoever, right? you can get this rolling. You can minimize your annual, you can, reduce your annual gross adjusted income, right? Annual gross income adjustment, right? You can, you can, you can maximize your required minimum distribution through qualified charitable distributions, and you can practice wise stewardship and be massively generous. Qualified charitable distributions. Now, I've heard about this a lot. Am I an expert? No, but if you'd like to talk to me, I'd like to talk to you. I would say it's a little bit of paperwork, and you're on the move. You're on the move. 70 and a half years old or older, you're on the move. 65 years old or older, the temporary senior deduction. Whatever age you are, if you have highly appreciated stock, right? And you want to avoid capital gains, so all that stuff, right? If you want to gain the benefits, avoid the detriments, listen, maximize your stewardship. Maximize your stewardship. Increase your generosity. Decrease your taxable responsibilities. This is an awesome pathway. Again, I'd love to talk to you. I'm encouraging you, find your passion projects, find your passion movements, qualified charities, right? And give. You want to talk to me about those even. You don't have to only talk to me about My Life Matters. I will be a servant to the kingdom, even if it's not landing on my corner of the castle. But in particular, if you would like to talk about My Life Matters, we need you. We need you. Big project ahead. We need you. God is opening more doors right now than we can meet the opportunity to walk through, and we know He's up to something. We need partners. We need short-term partners, long-term partners. If you want to talk to me, let's talk. Thanks for listening.